Uncle.
Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, in our previous episode, we had discussed the concepts of employers taking insurance policies on the lives of their designated employees with the intent to drive engagement, promote responsibility, and also accountability, manage risks and chronic conditions. But is this enough for your insurance portfolio? Can you rely solely on your employer's insurance, or can you get other kinds of group insurance, which are reasonable at a reasonable cost? To answer this and many other questions, we have Yashish Daya with us, co-founder and CEO of PolicyBazaar. Welcome to the show, Yashish. Now tell me, we've talked in depth about employer insurance, benefits that they give so that they can retain you or attract you to their company. But is that sufficient? Is that really sufficient for an individual to say, all right, I'm getting health insurance, or I have a life cover there, and that's all I need?
No, not at all. I think let's just stay with the health cover. An individual health cover and a company-provided health cover are two very different, pieces. When you have a company-provided health cover, that only lasts till the day you are with the company. It usually will have certain limitations which have to do with the contract that the company has entered into with the organization. So even though your name is there and you have a card which says you're entitled to that health cover, it is not necessarily a policy taken in your name. The policy was taken by the company for its employees, which may be going anywhere from 20 employees to a few hundred employees, and you are one of them, part of that particular policy. You follow exactly the same terms of the policy, and your policy lasts till the day you are with the organization. The day you leave the organization, you don't have it. More importantly, health insurance kind of products get very difficult to get as you get older. Primary reason being some disease or the other happens, plus insurance companies become fairly strict in admitting people once they are of a reasonable age. So it makes sense to have your individual policy from the very beginning and covering all the way. Also, most of the covers provided by organizations will not cover, I say 90% of them would not cover parents. You would need to have separate policies for parents, and there is a separate tax break for that as well, up to 20,000 rupees that one gets for people above 65 if one was to take policies for them.
What about, post-retirement benefits? What aspects are covered as far as those benefits are concerned?
So as far as the retirement piece is concerned, the savings plans that you have with insurance companies, they basically last till the day you are with the organization. Till then, your savings and your contribution create a lump sum, and you receive that lump sum. Usually, if you spend more than 5 years, you will receive a lump sum, and that comes in the form of a gratuity payout. If you move to another organization, you can carry that forward with you. But on your own, that will not be...
So that's another aspect that one needs to keep in mind.
That's okay, that's fine, but that will not be sufficient for you to create your own pension out of. Your pension will have to be a little more effort and a little more investment compared to that. Also, for personal accidents, etc., your company will not be able to cover it to the extent that you... The company will cover to the extent that you do not... You're not trouble for the company.
You're right. Basically, they're catered for a large group of people, and from a perspective of the employer. So, and the limits would probably be set as far as the company is concerned.
The limits of most of the policies that one would take from organizations would be fairly limited,
finite.
And they would be limited. They're finite and they're limited. The primary purpose is the cost that the company would have anyways may have taken on for social reasons, pressure reasons, etc. That's being insured. However, that is not enough for any employee. The employee does have needs over and above such pressures that the employer faces, and hence they need to have their own cover.
So, outside your employer-employee kind of insurance policies, there are group insurance plans which are available, which have a certain advantage. They are cheaper than what you might go out and buy. Now, can you just expound upon that a little bit, and what kind of covers can one actually look at?
Yeah, sure. So you do have group plans all over the place. You can take a group plan in any format. You could be a residential, welfare housing society. One can be part of an association. One can be part of a particular group of individuals. You can even have a carom club and call that a club and essentially make that a group. A very large families, more than 15 people can also start operating like a group. So a group plan is nothing but a collective plan taken by a group of individuals so that the risk is a little shared and it's not very individualistic in the sense one individual does not carry the entire risk of that policy or the entire cost of that policy. So it's spreading out.
So what are the pros and cons if you look at a group insurance policy and an individual policy?
Most of the group policies, as I would know them, are fairly limited in their longevity. They will not usually be lifetime policies because the group is not, as long-lived, or your association with the group is not as long-lived as your own. Plus, because it's a group policy, the organization and the group may discontinue the policy at some stage for different reasons. It may be profitability. It may be just that the plan doesn't make sense to some of the individuals, etc. Some individuals may not want it. So how would you continue it, right? Your own plan, on the other hand, is your own plan taken between the individual and the insurance company and usually lasts a lifetime as long as you want it to continue, whether it's a health insurance plan or whether it's a term insurance plan,
Yashish, would you say that there are inherent advantages to, say, getting a plan that if you're a CA and the CA, the nodal body, offers an insurance plan or a term cover to all its individuals by subscribing to that plan or that subscription, so as to say? Does it make sense doing that?
It can. Now, I say it can because technically, yes, if you have a larger group, you can reduce the prices and you can spread out the risks. That's the whole concept of insurance. And each policy can still be profitable, even though at an individual level, it may not be feasible to make it profitable with that level of risk. However, is that always going to be the case? Not necessarily. So that needs to be seen policy by policy if it makes sense, if it meets your specific needs. The biggest difference is going to be, does it meet your specific needs in particular? And I think the biggest weakness of group policies is the longevity.
So how would you prioritize it? I mean, we've been talking about group insurance policies. We've been talking about outside the realm of your employer, group insurance policies, and the individual. So basically 3 kinds of policies that we are looking at. So how would you prioritize it? What advice would you give our viewers?
Usually, if you are employed and you're finding it difficult to get health cover, you may go through the employment route. Otherwise, you should have your own individual cover always. So the first thing is try to get your own individual cover. If for some reason you're not able to receive that, a group mechanism is one way for those people who find it difficult to get insurance cover, otherwise to receive insurance cover. You can receive it as an employee. However, you can also receive it as a bank. If you're a member of a bank, if you have a bank account, you can get advantages of certain group covers. So group covers is something that you should start looking at if and only if you are finding it difficult to get an individual cover. Otherwise, you should go for an individual cover. That's the bottom line. From an employer's perspective, that changes a bit. An employer would like to create a group cover for his employees. And that's a different question altogether, but that's not so much for the employees. That's more for the employer.
So let's get into that aspect, employers, liabilities, and questions related to that after this short break. And we'll also take our viewers' questions. But you can write your queries at ask.policybazaar.com or tweet us at policybazaar_in. And we'll see you shortly after this break. Keep watching.
Let's look into future India with BP, where energy makes over 1 billion lives better. Energy discovered in the deepest waters and seen even through the rocks. With investments in lubricants, oil, gas and petrochemicals, we'll fuel this future together. BP in India. There is energy in this partnership.
Thank you, जादू. तुम्हारी धूप से मिलने वाली शक्तियों का राज अब मैं समझ गया हूँ.
फ्लेयर राइटोमीटर पेन में उतनी ही शक्ति है जितनी क्रिश में. फ्लेयर राइट टू मीट अ पेन साथ दे रहा है एक महान सुपर हीरो की सोच और जज्बे का। फ्लेयर पेन सेलिब्रेट्स द रिलीज ऑफ क्रिश 3।
भाई साहब, ये वायर आग तो नहीं पकड़ेगी?
घबराइए मत सर, मेरा पार्टनर देख लेगा।
और सुनो, ये वायर सालों साल बदलनी तो नहीं पड़ेगी ना?
डोंट वरी सर, मेरा पार्टनर है ना।
कौन है तुम्हारा पार्टनर?
ये
KEI।
हर समझदार इलेक्ट्रिशियन का एक ही असरदार पार्टनर, KEI वायर्स एंड केबल्स का स्पेशलिस्ट।
Welcome back to Policy Bazaar. I'm Arjun Bhagat, and with me is Yashish Dhaya. Yashish, what about liabilities as far as employers are concerned? You know, big, small, they have liabilities. They affect people, the environment around them.
Yes.
How do they cover themselves? And also that distinction that we've been talking about.
So see, anybody who's operating in business, whether one's got drivers on the road or whether one's got people on the call center giving advice to individuals, they have the impact of creating some losses to somebody else through wrong or negligent actions, right? And such pieces do tend to get covered under something known as a professional indemnity. So doctors tend to have it. You know, teachers should also start having it. And you know, of course, you have people in the call center. They need to have it because how do you know that the advice is right? And in case the advice was not right, the indemnity insurance cover is there to protect you from whatever eventuality comes out of it. And hence organizations need to have professional indemnity of employees. In addition to that, the employer has an obligation to provide a safe working place for the employees, and hence should have a liability cover for themselves, just in case an employee has an accident on the work floor or has a serious damage of some sort, which happens because of the employer's negligence. Such covers come in also, which essentially cover liability. So impact can happen to your employees, impact can happen to external bodies, and to cover all of these, you have various levels of cover. And these for employees, when you take them out for employees, they're usually known as professional indemnity. You also have covers like directors and officers, which is for the senior individuals in case they make any serious mistakes. And for the organization as a whole, you can have an employer liability cover, which essentially covers.
And this is available by a whole.
These are available by pretty much most of the general insurance companies in the country would have these. One obviously has to ask, and one would get it.
Right, now it's time for your questions. We've got Mukesh from Bangalore, and he says, I'm working for a leading telecom company which has a tie-up with the Raksha TPA. My father had a stroke last month. I have put medical reimbursements a month ago, and the same is under process. Now I'm planning to quit the job as I have a better opportunity. I've joined this company. He joined this company about 4 months back, and the coverage is about 4 lakhs. Will I get my amount if I quit now?
Technically, yes. Practically, it could get a bit delayed, primarily because his organization may not be as supportive in following through on the claims as it would be if if he was with the organization. But technically, there is no difficulty. The time period when the claim occurred, when the event occurred, and the claim was made,
time frame of
he was working at that stage, and he will technically he should receive the claim.
Right, we've got Pratik from Rohtak, and he says, in my proposal form for Apollo Munich health insurance, I've declared of a renal stone and ovarian fibroids of my wife. In response, Apollo Munich has told that both of these pre-declared diseases will have a permanent exclusion from the policy. Is it justified on the part of the company?
That is precisely why the medicals are held. If there is a disease which has already set in, which is likely to have expenses into the future, and the company can see that, the company does not have an obligation to take on those costs. They would obviously want you to take on those costs because they have happened before their policy has come on in. But you could have a look around, the individual can have a look around, and there is a possibility that some of the other insurance companies may be able to take on this particular claim without a permanent exclusion, with maybe a 3-4 year exclusion, as is quite the norm.
Right, Yashish, we've got Noinika with us from Vizag. Go ahead, Noinika, with your question.
Yeah, hi. I wanted to know if there's a difference between cashless claims and hassle-free claims in car insurance. And I also wanted to know if accessories and extra fittings in the car is covered under a car insurance policy.
Okay. So yeah, accessories can be covered. That's number one. Now, hassle-free is a terminology. Hassle-free basically implies you were able to make the claim well.
Paperwork will still have to be done.
Paperwork will still have to be done. But hassle-free essentially implies that most of the things happen smoothly without too much of an argument. Whereas cashless implies that you wouldn't have to pay. You would receive the cash upfront. So hassle-free is not a technical term. But yeah, cashless claim settlement does offer hassle-free dealing for the consumer.
Right, we've got Abhishek from New Delhi, and he asks, I often see while booking a flight ticket that they offer insurance at around 100 rupees. Now, what all does it cover, and under what circumstances is it worth it?
Mostly not hugely worth it, because many credit cards, etc., also provide that kind of a cover. However, what it does cover you for is any emergency that may happen, any loss of baggage, any loss of time owing to change in flights, or any flight changes and flight delays. Of course, there are rules and restrictions. Some places that it's up to 5 hours. Some airlines will have longer durations of delay allowed. The most important piece of difference between the international health insurance and the domestic health insurances, while international health insurance also covers international travel insurance also covers health insurance. Health insurance in general is not covered as part of the domestic travel insurance. So domestic travel insurance only covers you for loss of baggage, plane flight delays, flight schedule
Some
changes,
advantages to the international.
Some advantages are there, but the international one has a serious advantage, because the international one provides you the health insurance cover, which otherwise you do not have on the domestic insurance. So you cannot fly from here to Bombay and say I want to have a heart attack treated. Whereas on international travel, if you have international travel insurance, you could be flying from here to the UK and you can have your heart treated. So that's the big difference. But otherwise, they are pretty much the same.
Right, we've got Rishabh from Lucknow, and he asks, I've recently opened a store in my town and I want to insure it. What all should I be looking at before picking the right policy? Also, in case of fire, what percentage of the damage does an insurer pay?
The insurer can pay pretty much all the damage as long as that has been insured. You basically have your normal fire and perils policy. In addition to that, there would be you would have stuff kept in your all the contents can be covered. You can have employer protection policies. So those are the ways in which you would go about it. The best way is to call in an assessor and see which all areas one needs covered. So essentially stock, any lights, any kind of display or any kind of expense that has been taken on into the showroom can be covered, and your stock can be covered, and all the workers can be protected.
Right, thanks a lot, Yashish. That's all the time that we have on this edition of Policy Bazaar. But you can share your queries at ask.policybazaar.com, or you can tweet us at policybazaar_in. And we'll see you next time. Keep watching. Bye-bye.